I want to get your thoughts on really just help us understand why and what you mean by North Korea being the biggest threat to Japanese markets right now.
Because if the national security's tension, geographical tension is heightened, the volatility in the market will go up, which means that international global investors will have to close their positions, which means that yen is likely to appreciate because many of the investors are making the currency positions, which is something like a carry trade, which is the yen. They sell the yen as a funding currency, but they have to buy back yen if something happens.
Tohru, in fact, talking about the Japanese yen, I replicated your graph on the Japanese yen and U.S. Treasury yields. Take a look at the Bloomberg for our viewers. You say that there's a very strong negative correlation between the yen's nominal effective rate, the NEER. Now, that would be the line in blue right there, and the 10-year Treasury yield. The yen, of course, has been inverted in that graph. Why are we seeing this negative correlation, and how significant is this for the future direction of the yen?
Because of the hedging activity by the Japanese investors. Japanese investors usually buy U.S. Treasury with FX hedge. So if the U.S. Treasury go down, which means that the price will go up. So basically, they have to buy back yen. Price will go up, so they have to buy back yen. So those kind of hedging activity will cause those negative correlation between yen and the U.S. Treasury yield.
Yeah, the exchange rate assumption for a lot of these big Japanese exporters, I think if you base it on the latest Tankan survey, was between 105 to 110 on the exchange rate. Is it safe to assume anything below 105, and if we sustain the exchange rate below that level, that we risk seeing the BOJ intervene, at least verbally?
If that is before the Trump administration, it could be possible. But now, Trump administration is very harsh on the currency manipulation. So even if the yen decline below 105 or even 100, it is very difficult for the Japanese authority to do any kind of intervention, even it is a verbal intervention. I think that is also because of national security. Now Japan is fully relying on the United States in terms of the national security. So if we do something in currency, some type of currency manipulation, that will have a problem on the relation with the United States. So I think even the yen goes lower, it's a bit difficult for the Japanese authority to intervene.
We have to talk about this morning's news when we had the JGB 10-year yield just falling to zero. I mean, just a couple of months ago, we were talking about how the Bank of Japan would have to raise the target, the yield target, just because global bond yields were soaring. Now it's the other way around. So will the Bank of Japan trim its bond purchase amount in the 10-year sector as we see the yield hitting zero?
Yes, this is actually how can I say, the risky side of the BOJ's monetary policy. Because if the yield continue to go up, BOJ can buy JGB as much as they want. But as you mentioned, that if the yield continue to go lower, BOJ has to reduce the purchase amount of the JGB. So that will be a little bit contradict with their quantitative easing. Mm-hmm. So I think they will have to face some kind of difficulty. But basically, I think that the BOJ will gradually reduce the purchasing amount of the JGB. And they just hope that the market will not say that that's tapering.